Hello, it's DC and XCAL, and everyone is stoked for XCAL to return to more streams. They've been hammering for you. Clamoring for you. I'm an MLM dropout. I was in Mary Kay and Young Living, and I just terminated my account in April. Finally, because I sold my line. Well, it's a long story, but I'm out of MLMs now. I have a lot of things to say. XCAL has been joining me to assist with the math and the logic and the business sense and being an ethical salesman. And he's also here for the snark. So if you're not prepared, he's going to take you out with a little bit of sarcasm, and we're I don't know what I was going to say, but
I'm best behavior today, DC. I promise.
Oh, come on. They want you. Seriously. I've had so many DMs like, when's XCAL coming back? When's XCAL coming back? When he's going to stream with you? I'm like, I'm just going to sign my account over to XCAL and we're going to support. Look at this. Look at this. Yes. We're so stoked XCAL is back. Well, I'm going to let XCAL introduce himself. I know a lot of y'all are already fans. But he's my dad. We're related. His name really isn't XCAL. My name really isn't DC. That's just what we do. We're just protecting ourselves on the internet. He's used XCAL for years and years as his gaming name. Is that correct?
That's true. It was also my name on a fitness website.
Okay. Cool. Well, I'm gonna let him introduce himself as a refresher about who XCAL is, and then we're gonna talk about some stuff. And he has no idea because I didn't call him beforehand. We're just gonna fly by the seat of our pants, just like so many MLM Huns do, and we're here for it. So, XCAL, your turn.
Okay, great. Thanks, DC. So I am, like DC mentioned, her dad, and that's my claim to fame. Actually, I'm dad to several of her siblings.
All of my siblings.
Well, all that I know of. Yep.
Oh my god. Oh my god. Too early.
Luckily, DC's mom isn't around today, so otherwise she'd be slapping me.
Yeah, she'd be poking you.
Yep. Like she is off watching the grandbabies, so we're excited about that. No, but I've been in sales for quite some time. I'm a pretty old guy. And I've worked with big companies and small companies. I've owned businesses. I've sold businesses. And I've worked as employees with companies. I've not ever been a part of a multi-level marketing company that I know of, but I don't necessarily have any bias towards or for or against them. I just have a bias towards doing what you say and saying what you do and being ethical and honest while you're doing that. So that's important to me. And I really enjoy these times that I get a chance to meet up with all of DC's minions. And
oh my God, they're snarkies. They're snarkies. Yeah, they're a little school of snarkies. So
we had a great. I had a great time jumping on during Snark Week last week, and that was a lot of fun. But I'm really not like that. Absolutely.
No, oh, geez.
Almost never. Hardly ever.
Yeah, you're never sarcastic. You never have anything sassy to say.
Although I do have my alcohol there for all of the times that we stop our video.
Whoops. Nightbot is out of control. I'm going to block him. What is he doing? Okay. So someone had a question. So any thoughts about Snark Week? I think you were able to watch. How many episodes were you able to watch? XCAL 1?
Well, I participated in one. That was my big disappointment because I had such a blast that I wanted to be on several of the other ones, but I didn't get a chance to.
XCal's got a 6 to 10 job, or what is it when you work a lot of hours?
Yeah, something like
24/7,
that.
a 24/7, 5 days a week kind of job. Oh wait, no, you work 7 days a week because you have to work on your days off too.
That's right. That's right.
But from that one that you did watch, what were your thoughts about all the ecclesiastical certifications from that nutritionist lady?
I aspire to the all of the credentials that young woman has. I aspire to that. Someday I'll make up a whole bunch of my stuff and then I'll be as accredited as she is. But for today, I'm not.
Yeah, we're just lowly little serfs in the
we're
kingdom
just the peons and the NBAs that have to do the math and have to have 2 and 2 equal 4 and not 17. So we're all good.
Yeah. So we have a couple of options. I was thinking people could ask you some questions first, and also I know that people in the chat have listened to Carl Daikeler's Q2 earnings call, but I was wondering if XCAL could listen to it and give us his insight, because we thought Carl was full of it, and it just would be nice to know from another business owner, from like a peer level, if he really was full of it or if we were just being too critical, because we go hard on Carl.
We need to clarify: full of business acumen, wisdom, insight.
Well, I mean, if you add shit to that list, then I would say full of shit. So
okay.
Sorry, well, a little bit.
And since I am definitely credentialed in being full of I guess I'm qualified to talk about that.
Yeah, exactly. So I mean, it's perfect when we're both full of it. So I mean, it's just gonna be again, it's hi Mombi, hi Kat, hello everyone, Harper, what's up? Here's what we're gonna do. We're gonna do like 10 minutes. Ask XCAL a question, and we'll get them. We'll pop them up on the screen. We'll answer them, and then I'm gonna load up Carl Daikeler's Q2 earnings call and get XCAL's perspective on that.
Okay. Now everybody knows that I can't see the chat, so I don't have the ability to be able to answer these spontaneously.
I'm going to put them up on the screen. Heather says, "Hey DC, hey XCAL." Everyone's just kind of greeting each other. So please ask some questions. I'll ask you the first question. What do you like about sales?
There's lots of things I enjoy about sales. I'm a pretty competitive person to begin with. I think that selling involves all of the good things that go along with relational dynamics. It's something that challenges you every day. I love being challenged. It's also something that you get to be measured at, and I like being measured. Funny story. I don't want to get. Well, I'll tell you what. I won't get off in the ditch.
No, get in the ditch.
I was going to talk about my people.
Yeah, do it.
So, anyways, my youngest daughter works in a sleep company, and she had been after me for years to get tested for all of for sleep apnea, which I did, and of course I had it fairly significantly, like 37 or 40 times a night, an hour, I guess. I'd stop breathing, which explains why my brain is completely roasted. So, anyways, so I get this sleep apnea, this little machine that I hook up to, looks like a little space helmet I put on. And they actually give you scores at the end of every day. It actually goes on the internet and you can kind of track it.
Oh, do you get to compare against other people?
I'm thinking, why don't they do that? That would be so awesome. So I'm really into making sure I get 100 every day for my little sleep apnea score. But the nice thing about it is it changed my life right away. Literally, and DC will affirm this. I regularly fall asleep at the blink of an eye. And that doesn't happen anymore. I'm literally, I mean, I can't even take naps now. I'm so awake. The only thing I haven't really tested myself on is going to church and listening to one of my old pastor's sermons. I don't know that I'm really that wide awake yet, but short of that, I don't think anything can put me to sleep. So that's the good news. Lots of competitive sleeping. I'm not qualified anymore, actually, because I sleep so well at night that anyways. But to get back to the comment about sales, I'm like I said, I'm competitive, and I really enjoy that. I also enjoy the dynamic when I'm selling a product that I really believe in, and I really enjoy getting to know the people that I work with, and I enjoy the long-term aspect of sales as opposed to selling one thing and then moving on to the next sale per se. I like the idea of building ongoing relationships and dealing with people over a long period of time. So that's pretty fun too. And DC and I actually worked together for a period of time in one of the companies that I owned, and we had a chance to do that together, and that was a blast. Sometimes.
Yeah, sometimes it was,
yeah, exactly.
Yeah. Just walk really fast by the homeless people when you're carrying 4 boxes of evidence or the copies to the law firms. And, I mean, I'm not taking a dig at homeless people. It's just sometimes it's like, you're a girl and you don't really have your hands and you're pushing a dolly, and it's like, I'm nervous. And I'm also like, gotta get there on time. Yes, exactly. It's like, no. I mean, so you like the long-term aspect of sales because you're a competitive person. You like being challenged, and you really like long-term relationships with people. Do you think
maybe I should join an MLM and start a team or something like that?
Oh my gosh, we will be your downline. We will be your downline. Oh, we actually wanted you to infiltrate someone's Zoom call and ask questions to ask good questions, but maybe cause a little bit of healthy turmoil in the group.
Oh.
And live chat.
I mean, that really is not really my character to cause turmoil and strife.
Oh my gosh. You and Janet, Jana Miller it's actually Janet. This is her daughter's account, but Janet and you would cause so much trouble. Like I saw y'all on the last live chat. So I feel like y'all would take down a team from the inside so quickly. Hi, Lori. What's another question? Y'all, we need some questions for XCAL, or we'll just load up Carl because he's a whole moment by himself. Hold on.
Yeah, they're not really that interested in finding out about me, I don't think.
Yeah, they are. You know how many DMs I get a week? Where's XCAL? Is XCAL coming back? Where's XCAL? And it's great because I like XCAL too. I just didn't know my dad would be so popular. You know what I'm saying? Okay. Exit. I was recording a Zoom call earlier, so let me just open this back up.
Okay.
All right. Quarter. Call. Beach. Is that my sister?
It is your sister.
Hi, sister.
Hello, sister.
She either just got back from a run or something. She doesn't look like she came back from work, though. Oh, a little exercise, huh?
Beating somebody up.
Oh, nice.
Yeah.
Okay. I found the call. Come on. Okay, so I'll tell you the conference call partners. These are the investors for Beachbody. We have Guggenheim Partners, D.A. Davidson, Credit Suisse, Baird, and Bank of America are the people who are going to be asking Carl questions on the call. I think it's important to listen to a little bit of the call, like where he's talking, like the recorded part. Yes, Dad is back. We've also put you up for adopting everybody who doesn't have a dad. So we've already outsourced you. I don't know what the correct term is, but
I guess
we have a term in anti-MLM, like call your dad, you're in a cult. And so it's like, well, if you don't have a dad, call XCAL, you're in a cult. So let's see, where's the call? Here it is. We've got it up. I'm gonna press play.
Good afternoon,
Okay, can you hear that?
ladies and
I
gentlemen.
did.
Welcome to the Beach
I'm going to increase the sound a little bit.
Okay.
Because a little low.
Body Company's
Oh,
second
it's not
quarter
working.
2022 earnings call. At this time,
There
all
you go, that's better.
participants are in a listen-only mode. Following the presentation, we will conduct a question and answer session. Instructions will be provided at that time for you to queue up for questions. If anyone has any difficulties hearing the conference, please press *0 for operator assistance
I
at
sped
any
it up
time.
a little bit.
I would like to remind everyone that this conference call is being recorded. And I will now turn the conference over to
We've
Eddie
already
Plank,
played it.
Beachbody's Group Vice President of Investor.
Oh, yeah, I'll do a little bit of a stewardess moment. Here are some things you have to look forward to on this call. Hearing Carl Daikeler call all of his coaches an unsophisticated volunteer sales force. Hearing Carl answer questions with no numbers and also interrupting his CFO, who's actually giving us numbers so that he can try to convince people that Beachbody is not on fire. So it's a good time. And XCAL is actually less heated about this than I am. So hopefully we're going to get some good insight from XCAL.
Well, and if truth be known, DC, don't forget to tell everyone that we went through the P90X.
Oh, yeah, we went, but we
on the CDs.
Yes, on the CDs. Yep. So, yeah, that was before they were in an MLM. They turned into an MLM like in 2009, I think.
Yep.
So they started in 98 and they were like watch an infomercial, buy the product, and then they transitioned into their coach situation.
Gotcha.
So, yep.
Relations.
Come on.
Welcome, everyone, and thank you for joining us for our second quarter 2022 earnings call. With me on the call today are Carl Daikeler, co-founder, chairman, and chief executive officer of the Beachbody Company, and Mark Sweden, chief financial officer. Following Carl's and Mark's prepared remarks, we'll open the call up for questions. Before we get started, I would like to remind you of the company's safe harbor language. The statements contained in this conference call, which are not historical facts.
We're listening. What are we doing? Adopting XCAL as our dad? I'm in. Yes, literally, XCAL is everyone's dad. Yes, but I like fire. So, yes, it is a word salad. Some people have listened to this. I think we're going to get hopefully some good insight from XCAL.
May be deemed to constitute
because XCAL understands also what they're actually talking about, and I will stop interrupting them.
Forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. Actual future results may differ materially from those suggested in such statements due to a number of risks and uncertainties, all of which are described in the company's filings with the SEC, which includes today's press release. Today's call will include references to non-GAAP financial measures, such as adjusted EBITDA. A reconciliation of these non-GAAP financial measures to the most comparable GAAP financial measures is available within the earnings release, which can be found on our website. Now, I would like to turn the call over to Carl.
Thank you, Eddie, and good afternoon, everyone. We're very proud of our performance in the second quarter. We were able to adapt quickly, focus, and execute in the face of a challenging macro environment. And as a result, we delivered revenue in line with our guidance and adjusted EBITDA that was ahead of our guidance, reflecting continued progress on our strategy to make Beachbody more efficient, effective, and productive. With laser focus on execution and cash flow management, we achieved material savings in the second quarter, reducing cash burn by nearly $38 million and lowering operating expenses by more than 20% compared to the first quarter. This reflects increased variability within our cost structure and continued expense discipline. As a result of these actions, we ended the quarter with $57 million of cash on hand. In addition, today we announced that we entered into a $50 million debt financing agreement with Blue Torch Capital, with the potential to increase by another $25 million. The transaction will enhance our financial flexibility as we continue to execute on our strategic goals. During the quarter, we also focused on profitable customer acquisitions through new content releases, our highly effective proprietary sales network, and disciplined marketing, despite continued softness across the industry. These results reflect solid initial progress on our one brand strategy. This strategy, which we initiated at the beginning of the year, demonstrates our ability to adapt quickly to economic realities. The one brand strategy isn't just about costs. It's about unlocking the full potential of our massive category and our unique assets as we consolidate the great content of our platforms and leverage the subscriber scale of Beachbody On Demand. Last month, we reached an important milestone as we completed the migration of all our content onto the Beachbody platform, adding 20 additional programs and roughly 1,000 standalone workouts all in a single day.
So they bought this company, Mix. They have kind of like the Peloton bikes. It's a cheaper bike that's integrated with their system.
Okay.
And so they fully, I think, brought over all those programs under the Beachbody app. But they had to fire a lot of people at Mix because their investors for the first quarter earnings call wanted them to reduce their cash burn or wanted them to reduce costs. You'll find out on this call, but they did that by it's been a little bit messy. So that's what, when they say they've added all these programs, it was from Mix. It was from OpenFit, I think. So when they bought that company, or when they reintegrated that company, that's where all those new programs came from.
Gotcha.
Creating the largest content drop in our history and adding to our already significant library of evergreen content. This considerable library of assets is what powers our flywheel, where each program title can drive new customer acquisition, customer engagement, and ultimately brand loyalty. We also delivered profitable subscriber acquisition and nutrition upsells with 3 recently launched programs: 4-Week Gut Protocol, Fire and Flow, and 4 Weeks for Everybody. These strategic offerings both bolster our future category and market potential over time and can drive immediate revenue and expanding the LTV of our current customers. As you know, in tough times, strengthening and expanding relationships with current customers is key. In the third quarter, we're continuing to grow our nutritional portfolio with the introduction of the First Thing and Last Thing supplements. A nutritional.
So, Dad, just to give you a picture, they make a lot of their money off of these protein shakes that initially they had marketed to say, this is the shake that you need. It has a ton of stuff in it. You don't need these other supplements. Then as the years have gone on, they've added more and more and more supplements. Because at one time, I think they were bringing in 70 to 80% of their money from shake sales.
Oh, really? Okay.
Yeah. And the shakes are disgusting. I tried them on live, and if you can imagine, I was gagging and coughing on them because they say, oh, just give up your Starbucks and you can pay for the shake. Well, you can't just put the shake in water and ice and blend it up and it tastes good like some other protein shakes. When you do that, there's like a horrible metallic-y algae kind of aftertaste on all of them.
Gotcha.
And so you have to add peanut butter and bananas and like all this other stuff. So instead of it being like a 1-for-1 trade for like, I'm going to give up a Starbucks and I'm going to get Shakeology, it's you have to give up Starbucks and a portion of your grocery bill because you have to add all these fruits and other things to make it taste good. Yep. So anyway, so he's the First Thing, Last Thing is a supplement. They've added some programs, but they've added more and more and more supplements. So
sure.
Yeah.
Combination that's ideal for customers looking to improve overall wellness, improve mental clarity, reduce stress, and improve sleep. These completely unique new products represent a powerful lever to drive both LTV and near-term revenue as we market to existing customers who are predisposed to buying what Beachbody develops because they appreciate the quality.
That's what it tastes like.
We also recently launched another fitness program called Lift More, a program that features trainer Joel Freeman and is a follow-up to his highly successful Lift franchise. Response has been very positive, especially as we see men and even couples choosing to follow this 8-week program together. With respect to connected fitness, we also continue to drive higher LTV from demand for bikes across our subscriber base.
Oh, give me a break.
Our focus remains on creating great indoor cycling content and an experience that is tied to our broad and deep content library.
Hey, Tanya.
And it's that content, not price, which creates the distinct Beachbody biking experience. Heart rate-based training with great content is our unique selling proposition. And ultimately, we're a platform powered by content and experience, and devices like the bike are the conduit to that experience. And soon, we'll be making it even easier for customers to join our ecosystem with an extremely compelling digital subscription offer. But we'll talk a little bit more about that later in the year. Now, turning to marketing. During the second quarter, our coach network continued to serve as a powerful and profitable driver of acquisitions and nutrition subscriptions, with high levels of motivation and excitement around this year's launch calendar. While we're pleased with our coaches' enthusiasm for reaching more people this quarter, we continue to pilot new incentives and training programs to enhance their role as brand ambassadors. For instance, with the recent launch of Lift More, we offered a select group of coaches the opportunity to participate in what we call a BOD group. That group completed the program with direct coaching and guidance from Joel Freeman, which has enhanced their ability to represent the program to their prospects. And a few weeks ago, we mobilized more than 15,000 coaches as part of our annual summit. It was our first summit in 3 years, and it was clear as we left St. Louis that the coaches were invigorated and excited about our substantial category potential.
XCAL, do you know how much they spent on Summit?
Am I going to guess?
Yeah, go on.
Coaches there.
They have like.
And did the coaches all pay for themselves to go, or did the company?
Yeah, they paid for their flights, they paid for their hotel rooms, they paid for their food.
And it was a week-long deal or a couple days?
Maybe like 3 days.
Okay. So I'm going to guess and there were 15,000 that came?
Yeah, I think about 15,000.
Okay. So I'm going to guess probably to the tune of about $1 million.
More.
2 million?
Nope.
More than that.
A lot more.
Okay. So it was more than. Oh, I'm sorry. If it was $1,000, I'm thinking $500 a piece. So that should be more like 7.5 million.
Yeah, 7 million.
7 million.
No food.
Okay.
No food was provided. No drinks were provided. No, it was just they rented out.
They're trying to get them to lose weight, babe.
Oh, I forgot that part. Okay.
Yeah. It's all about losing weight and being in shape and stuff like that. So they didn't want to feed them, get them fat and all that convention food. Got it.
That clears up so much for me. I didn't think about that part.
Just trying to add value.
Offerings and the meaningful difference we can and do make in millions of people's lives. Our coach network is profitable and productive, providing a foundation for future success that no one else can replicate. Given the income earning opportunity for coaches, this proprietary sales channel also provides some counter-cyclical momentum to the business during these times of economic uncertainty. During tough times, Beachbody is even more valuable to our coaches, and the income we provide becomes more important to offset pressure from higher costs or as a way to offset loss of income.
So in Beachbody, you have the CEO and their C-suite, and to do all of these like classes, they have these super trainers. So Tony Horton used to be a super trainer. Okay. So they pay them. They're not like coaches where you would make a commission off a downline. There's one big coach called Autumn Calabrese, and she made so many stories basically saying that St. Louis has no vegetables.
But they have beer.
Huh? They do have beer. So, and they have a shake bar that you have to buy a shake for $6 or $7 a shake. And it's just blended up. I don't know. I just go get a Starbucks or something, or go to Smoothie King.
As you know, we have an omni-channel revenue strategy. Throughout Q2, we continued to successfully execute our direct-to-consumer marketing strategy, bringing our average CAC down by over 40% versus Q1 and achieving immediate cash payback on our media investment. LTV for our subscriber base remains strong, with a significant portion of new customers signing up for our annual membership, and we continue to capitalize on multiple levers to enhance LTV. During the quarter, we increased the price of bot subscriptions by roughly 20%, with no material impact to conversion rates, reflecting the strength of our product offering and our ability to drive profitable subscriber acquisition through target marketing. We've also seen continued success in increasing LTV as we upsell our premium body experience to existing Beachbody On Demand subscribers. Our body users have some of the highest levels of retention across our user base, and we're expecting that part of the subscription to become a central part of the value equation in the months ahead. And with the completion of our platform consolidation this quarter, we'll now be able to market our entire suite of products, including Beachbody supplements, to our full user base for the first time, representing an important opportunity to drive enhanced LTV over time. Looking to the second half of the year, we're taking a prudent view of the environment, given our expectation that demand patterns for at-home fitness could remain variable in the near term, with greater levels of uncertainty around the broader economic climate. Regardless of the macro backdrop, we'll continue to focus on profitable acquisition, generating demand through our compelling cadence of new releases and tightly managing expenses. I'm incredibly confident in both our ability to manage through any near-term pressures, as well as taking advantage of the significant opportunity that remains over the longer term. Specifically, we're operating in what is still a large and underpenetrated market. the global dietary supplements market was $151.9 billion in 2021 and is expected to expand at a CAGR of 8.9% from 2022 to 2030. And the global home fitness category is expected to grow to $21.8 billion in 2026 at a CAGR of 9.6%. With more than
This is the only time that he shares numbers in the entire talk, even when he answers questions from the investors later on.
Is this the CEO or the CFO talking?
This is the CEO talking. The CFO is about to talk,
All right.
maybe in like 2 minutes.
Okay.
What are your initial thoughts about your listening to him so far? Are you going to wait to reserve judgment?
Yeah, he's making he sounds like he's trying to talk a dog off a meat wagon. I mean, from the standpoint of getting information out there, I'm guessing that he had a timer and he had to get all the stuff he had to say said in a certain amount of time.
Yeah.
But as opposed to creating, and this is a very typical investor call in terms of just trying to throw out a bunch of numbers. Basically, this is fluff. This is the stuff on the front part of the annual report. The back part of the annual report with all the numbers is where all the real meat is. And that typically is what happens with the questions.
Okay.
2 million subscriptions. Our scale is significant in the at-home fitness segment. And our model, which is powered by content and supported by nutrition and community, is unlike anything else in the market. We're confident we can continue to generate demand with our content-driven model that allows us to pivot quickly to capitalize on emerging trends and needs.
Mombi, I think it's just on your end. I don't see any pauses on my end, and I have it open in another browser. So I'm just double checking, but I think just get out and get back in.
And as the future of health and fitness becomes more digital, our unique value proposition is particularly compelling, given the simplicity of one platform and our suite of integrated fitness and nutrition products. And finally, we have a strong and collaborative management team in place with clear alignment on our objectives and all working from the same focused playbook. We've made several additions to the team recently, including Mark Sweetan, who joined as CFO a few months ago. In his first quarter as CFO, Mark has provided significant strategic and operational insight, identified additional opportunities to enhance efficiency, and served not only as a thought partner to me, but also a real leader to the finance organization. His experience and perspective are already proving to be invaluable in delivering on our strategic goals. In addition, we recently promoted Kathy Brabeck to the role of COO. Kathy joined Beachbody last year as Chief Strategy Officer and played a central role in a number of key initiatives, including the development and execution of the One Brand strategy. She also brings with her extensive experience in the technology and consumer sectors, including senior roles at Electronic Arts and Activision. Likewise, Irfan Ronmel has taken on an expanded role as our Chief Product and Technology Officer. Before joining Beachbody, he held key leadership roles at Disney, Hulu, Activision, and DirecTV. Uniting our product, data insights, and technology teams under his leadership has allowed us to make better and faster decisions and more fully deliver on the power of our digital platform. Let me sum it up with this. My confidence and the confidence of our leadership team is unwavering. In fact, our management team collectively purchased more than $6 million worth of shares on the open market during the second quarter. We did this as individuals for one simple, powerful reason. Beachbody's future potential is massive. The actions we're taking to make the business more efficient and productive, such as reducing our cash burn and increasing the flexibility of our cost structure, are allowing us to navigate the dynamic near-term environment. And with a strong leadership team and a commitment to continued innovation, we are incredibly well-positioned to capitalize on the significant opportunity ahead. So with that, I'm very pleased to turn it over to Mark for more detail on our performance in the second quarter.
Quick question. I know we have to listen to the CFO. When he says, in fact, our management team collectively purchased more than $6 million worth of shares on the open market during the second quarter, is the only explanation the confidence they have in the company, or would there be other reasons that could...
Great question. Great question. Okay. So first of all, they purchased 6 million shares in the open market. We don't know how many they sold. So from that perspective, if it's 6 million net shares, or it's 6 million shares just that they bought and they sold, 8, then obviously, that needs to be taken into account. So you have to listen to all this stuff and ask good questions like you did, DC, just now. Is that, what's the reason behind that and what's going on? It could very well be that that he encouraged all of his guys to do that in anticipation of this call, to be able to promote that as the fact that everyone is so bullish on the prospects in the midst of them buying other companies to inflate their sales revenues and dealing with a number of other issues. I mean, obviously, the investors were talking to them last quarter about reducing their quote unquote cash burn. In other words, they're going through the cash they have on hand quicker than they're bringing it in.
Okay. That makes sense. So Mark's about to talk.
Thanks, Carl, and good afternoon, everyone. It is my pleasure to join you today for my first earnings call as the CFO of the Beachbody Company. Before joining the company, Beachbody always stood out to me as a source of inspiration for getting people healthy and fit, with an impressive track record of developing amazing content that turned its trainers into household names. And in my short time with the company, I've been impressed with its strong, collaborative culture, willingness to evolve, and commitment to win. As Carl mentioned, we are operating in what is still a significant addressable market that remains largely underpenetrated. And we have the right ingredients to seize that opportunity, including the best fitness content and programs, a powerful coach network, and the advantage of being the only company providing a total fitness and nutrition solution. Since I started, my focus has been on improving our profitability and getting the company to be free cash flow positive. And we have made meaningful progress.
Carl, probably.
As a result of our swift actions to pull more costs out of the business, we materially reduced cash burn to roughly $6 million in Q2, a nearly $38 million improvement versus the $44 million we spent in Q1. And we delivered adjusted EBITDA that was not only ahead of our guidance for the quarter, but significantly less than the loss we recorded in Q1. We have also taken steps to increase the variability of our cost structure. As a result, 75% of our costs are now variable, giving us greater ability to flex with changes in revenue.
I hate to pop a question on you, and maybe you don't know the answer to this, but what does it mean when they say increasing variability of cost structure?
Okay. Great question. So you have fixed costs and variable costs in business. Fixed costs are like rent. You pay the same amount of rent whether you have, whether you're doing 10 million in sales or 100 million in sales. And so a fixed cost is a cost that is tied that you pay regardless. And the more fixed costs you have, the more that is something that doesn't change. Variable costs shift. It's like for a restaurant, what does it cost to buy the food? The more food you sell, the more you spend, obviously, but you're selling more food, so it's a variable cost. If you sell less food, you'd buy less food, obviously, to make the meals. So that's an example of a variable cost. And the reason that you want as few fixed costs as possible is because it gives you the ability to be able to shrink or expand much more aggressively. So his perspective that they have more variable costs, it is a way of him to say that they can manage their profitability more effectively based on their sales. The more meaningful information that I heard was the fact that they've had 2 quarters in a row of losing money, which is a big deal. And now, granted, they reduced how much money they went through and lost from quarter one to quarter two, but that's still a trend that is very concerning, obviously.
Okay. Are there ever situations where there's a healthy company where they would lose in the first 2 quarters and make it up in quarter 3 and quarter 4?
Well, absolutely, they would. And frankly, there are industries that, for example, historically lose money in certain times of the year and make money in other times of the year. So just because they lose money, obviously you don't want to lose money. So that's the bottom line is you don't want to be there. But you have to take it both from a microcosm and a macrocosm. In other words, the macro is how have we done for the last 5 years? If we've made money for 12 quarters in a row and then all of a sudden we lost money 1 quarter, it's not time to jettison everybody at that point in time. I mean, we need to take that in the balance of the bigger picture. On the other hand, if we've been losing money for the last, 15 quarters, then it's a continuation of what is obviously a trend. and much more significant and serious action needs to be taken at that point.
Okay, thank you.
Sure.
Looking ahead, I'm also confident in our long-term revenue growth opportunities. Given the environment, we're going to do more to manage costs in the meantime. To that end, I have begun a thorough review of the business and have already identified several additional near-term opportunities to improve profitability moving forward. Here are two preliminary examples. First, optimizing the SKU count in our nutritional offering. To improve our gross margin, we will reevaluate SKUs that don't meet our strict price and profitability thresholds or that are not reflective of market demand. We are also testing targeted price increases as we deal with industry-wide cost inflation. Second, managing operating expenses very tightly while continuing to invest in our transformation. Among other things, this effort includes optimizing our distribution network, moving more processes to the cloud, implementing strict spending controls, and reevaluating how we manage international markets. In the coming weeks, I will continue these reviews with the goal of identifying and implementing additional initiatives to refocus, simplify, and strengthen the business as we progress through the balance of 2022 and into 2023. Now, turning to the details of the quarter. In addition to comparing our results to last year, I would also reference comparison to the second quarter of 2019 where it's helpful. Total revenue was $179.1 million, which was in line with our guidance. This reflects the ongoing shift in consumer priorities that our business and industry have been experiencing. Please keep in mind that the decline in sales is also partially due to our deliberate focus on profitable customer acquisition. Digital revenue was $78 million, which was a 17% decline from last year. Similar to last quarter, we had a reclass.
That's not good, right?
No.
That doesn't sound good to me. Oh, shoot.
Of business service fees from preferred customers out of digital and into nutrition and other revenue. Adjusting for the shift, digital revenue would have declined by 8%. Digital subscriptions decreased 16% year over year as we cycled 2 years of strong growth through the height of the pandemic. However, when comparing to our pre-pandemic baseline, digital subscriptions continued to show solid growth of 35% over the second quarter of 2019. Engagement, or DAU/MAU, was down versus last year, but increased by 140 basis points compared to 2019. Quarterly retention levels increased over last year and Q2 of 2019, demonstrating our ability to retain subscribers through continued content innovation.
We need a translation, XCAL. Translate to non-MBA speak for what this guy's saying.
Unfortunately, you need a couple things. You need to go back. What he's trying to do. So there's a lot of things going on in their business that potentially cover up some numbers. If they've acquired new businesses, then that potentially adds to their revenue. But that revenue was in another business last year. So this year it looks like for them to have declined in revenue while adding a business speaks to the fact that their business actually suffered more decline than they might be saying up front. Now they're trying to identify where the specific pieces of decline are and tap dance around the fact that, oh, it's not really as bad as it looks like. So you have to, a part of listening to these calls is you have to read the information and know where the company is to know where it's going. And then you can, formulate some meaningful and specific questions without having gone through any of the stuff with Beachbody. I'm a little clueless as to what the specifics are.
Yeah, and I think it's hard to just throw stuff at someone. So apologies for that. There's some interesting parts that come up in the questions when Mark's finished talking, and the interesting part is because we understand it from seeing all the coaches side of it, and when in the question part, XCAL, someone asks, well, how much did you pay out in coach commissions, or how many coaches do you have and how many are you paying out? And they said, well, we don't normally share that information in these investor meetings. And it's like, that's an interesting stance to take because the reason that they even are bringing money in is from these coaches. Do you know what I'm trying to say? Like,
well, and they've made a couple of comments during their presentation about their exciting and innovative coach network and how aggressive they are and how excited they were from their summit and blah, 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 blah. So they've made a big point about hyping up their coach network. and that distribution line that they have.
Yeah.
So it'll be interesting to hear them come back later, perhaps, and trash talk them.
Yep.
The thing you have to understand about these is think back to when you were in school and making a presentation, and you didn't really do that well in a certain area. So you don't want to spend a whole bunch of time talking about it, and you want to spin it as good as you can so that it sounds like you did better than you really did. That's kind of like what these calls are about. Now, obviously, the more successful the company, the more the less of that they do. But the reality is that there's a lot of spin going on everywhere, and the real meat comes from the questions from the investors later.
Yeah. Yep.
Nutrition and other revenue was $90.5 million, down 30% compared to the second quarter of 2021. Part of this decline correlates to the decline in digital subscriptions. Digital subscriptions, along with new product launches, drive our nutrition business. Looking ahead, as we have now lapped the toughest comps of the pandemic period, we believe our solid pipeline of new products, enhanced cross-sell and upsell initiatives, and efforts to simplify customer choice to reduce SKU counts should support improved demand and performance moving forward. Connected fitness revenue was $10.6 million with 8,800 bikes delivered. We continue to see higher engagement in the second quarter amongst digital subscribers who own a bike versus those who don't own a bike. This is an encouraging trend that reinforces our belief that the connected fitness business is a valuable contributor to LTV. Gross profit was $87.3 million, or 49% of revenue in the second quarter versus 69% last year. Roughly 75% of the year-over-year reduction was related to the negative margin in connected fitness. Digital gross margin was 76.4% and declined 1,130 basis.
XCAL, let me go ahead. I'm going to signal you this link because it has the transcript written out. I don't know if that would be helpful for you to look at on your end too, but if you want it, I don't want to just make you, I know you can grasp it, but I don't know. It's just sometimes easier to read it too. Signal. All right. There you go. If you scroll down, it'll be the transcripts all there.
Points versus 2021, primarily due to higher content production costs and the timeline with which these costs are amortized. The biggest increase within digital COGS is from the launch of Bot Interactive. Additionally, roughly 300 basis points of the decline related to accelerated depreciation and program amortization in connection with our one brand digital platform consolidation. And finally, the business service fee reclassification I mentioned earlier had roughly 200 basis points negative impact given the high margins of that revenue. Nutrition and other gross margin was 53.6%, a 210 basis points decline from 2021. Most of the change was driven by an increase in depreciation expense for technology initiatives to support our nutritional product sales, along with ongoing pressure from higher product costs and shipping expense. These offset the margin benefit from the business service fee reclassification. Moving forward, as we review the nutrition portfolio, we believe we can uncover opportunities to improve margins at the product level over time. Connected fitness gross profit was negative $20.9 million. The majority of this was due to $15 million in non-cash expenses we incurred for inventory reserves. Also, our connected fitness gross profit continues to be impacted by higher shipping, freight, and warehousing costs given ongoing supply chain pressures. Total operating expenses decreased approximately $53 million, or 29% year over year to $131.7 million. As we continue to
we're almost to the questions, guys.
Migration to one brand. In particular, we significantly reduced our media spend in line with our high return, low risk customer acquisition strategy. As a percentage of sales, our selling and marketing expense declined over 14 percentage points compared to Q2 2021. Sequentially, this was a 19% reduction in spend compared to Q1. But media was not the only area where we generated savings. We also reduced our enterprise technology and development costs by 28% versus the first quarter. And since the beginning of the year, we have reduced our total headcount by more than 25%. All this contributed to a materially improved adjusted EBITDA loss of $1.5 million in the second quarter. Our net loss was $41.9 million, or negative 14 cents per basic and diluted share. With respect to the balance sheet.
Okay, what? So they said our net loss was $41.9 million, or negative 14 cents per basic and diluted share. What? That's not good. All I know is that doesn't sound good to me.
No, this is not a happy call.
Okay.
This is not a warm, fuzzy call where everyone is, blowing the little air horns and cheering on, saying "Rah Rah Beachbody." There's a bunch of concerned investors that are getting ready that have their questions, and that want to play hardball as far as the questions probably go, because the company's not doing well.
Yeah. So again, not that it's super important, but I don't know if it plays into this, but it feels like interesting information that their stock price dropped 90% in 52 weeks. So when we looked it up a couple of weeks ago, it was like $1.16, and that had dropped 90%. And I know that's just a piece of this pie. And they said that they were hit from the pandemic in the year after 2020, but
you would think that they would be better positioned because of all the stuff from home, as opposed to going into a gym or something like that.
Yeah, you'd think. Okay.
Interesting.
As I said, we made significant improvements in our cash burn in Q2, and ending the quarter with an unrestricted
it's
cash balance of
136 now.
$57.1 million and no debt. In addition to lowering our operating,
which is why spending $6 million on, they're trying to buy it at what they perceive to be a low point.
Yeah.
Obviously, it has almost no value right now. Their stock is just in the ditch, upside down with the wheel spinning.
Yeah.
So if they can make any kind of change from here, then that $6 million turns into a bunch of extra money for them down the road.
Yeah.
We also reduced our inventory position and our capital expenditures in Q2 compared to Q1. Looking ahead, we will maintain a strict cost and cash discipline approach. This includes identifying additional cost savings opportunities. With a solid cash position and significantly improved cash burn rate, we are confident in our ability to manage the business through operating cash flow while continuing to make select strategic investments in our technology platform that are critical to supporting our long-term success. However, as Carl mentioned, we also announced that we have taken the deliberate step to enter into a debt financing agreement with Blue Torch Capital for $50 million with access to an additional $25 million facility. The transaction enhances our liquidity.
What does that mean? They're going to debt so that they have
more cash. They're getting access to more cash.
Okay. But that's not good for the investors in terms, like, they have to pay interest on that money that they're taking from. It doesn't matter.
Well, the fact that they can get it right now at this point in time, it's $1.30 a share. So I mean, you're talking about a penny stock right now.
Yeah.
It's as bad from a shape perspective. It's not. It's not in very good shape. It's one of those before pictures in the back of the comic books. That's what their stock is like. Their stock needs to get in shape and do a couple of P90X workouts as far as that's concerned, because they're working with the 5-pound dumbbells, not the 35-pound dumbbells.
Yeah. Yep.
Position and provides us with additional flexibility. Now, I'd like to take a moment to discuss our outlook for the remainder of 2022. As we think about the back half of the year, it's clear that the consumer post-pandemic mindset persists, with people preferring to be outside and travel. And the pressure of a high inflationary environment and recession fears are beginning to weigh on the consumer spending patterns, all of which is increasing variability in demand trends. As a result, Q3 got off to a slower start than anticipated, and we expect the top line to remain under pressure in the near term.
This is just right after their summit then.
Oh, yeah.
So they went and hyped everybody up for their big summit and spent $7.5 million or $7 million, and then Q3 started and they're doing worse, not better.
Yep. You are correct.
To navigate the softer demand environment, we will remain hyper-focused on cost management. With respect to profit and cash flow, our plan calls for gradually stemming our cash burn and returning to positive adjusted EBITDA and free cash flow over time. However, as we said last quarter, we don't expect our improvements in profitability to be linear quarter over quarter. For instance, in the back half, we will incur expenses for new employee hires, merit-based compensation increases, and tech investments to position the business for the growth that Carl referred to. That said, we expect to show a meaningful reduction in losses for the remainder of the year when compared to 2021.
They fired a ton of people. They fired a ton of people from Mix when they bought them. And that's, I know that happens when a company is acquired and you're cutting costs, but when they're talking about they're making like they're going to incur expenses for new employee hires, well, they just saved themselves a lot of money by letting go a chunk of people at Mix and stuff. So it doesn't, I don't know. It feels a little bit interesting for them to try to do what they can to come into this call as strong as possible when they're also saying, well, we're going to hire a lot of people too. And it's not necessarily going to reflect in an upward trajectory.
Yep. You don't need me for this.
No, I do need you. I do need you. I have no idea what I'm doing. I'm just like, this sounds like someone is, this sounds like someone's trying to pull one over them. Yeah, it does. And it gets worse. They just got
rid of a bunch of intellectual capital in their mixed company.
Yeah.
And now they're going to go out and hire some new people and start all over again down the same road.
Yep. Yeah. It feels like they're like beefing up, like they were putting lipstick on a pig situation. Like they were, trying to be like, oh no, this is, it's great. And then they're like, we're going to do the exact same thing, because they should have just said, look, it's going to cost us more in the long term to train new people. And these are people who already understand this company. They didn't, it's just, all right. Okay.
Taking into account, for the third quarter of 2022, we are guiding as follows. Total GAAP revenue of 150 to 160 million and adjusted EBITDA loss of 15 to 20 million. Please note that in addition to the factors I just outlined, our Q3 guidance also reflects an incremental $7 million in expenses related to our annual Coach Summit event in July. Finally, we now expect to realize a combined adjusted EBITDA improvement and CapEx reduction of approximately 110 million to 120 million in 2022 versus last year.
To wrap up, although the environment remains challenging, we are committed to taking action to return to positive cash flow, drive profitable growth, and create long-term value. We believe our focus on aggressive cost management through the back half of this year will set the business up for future growth and profitability as a leaner, more agile organization. With that, operator, please open it up for questions.
Thank you. If you would like to ask a question, please press star followed by 1 on your telephone keypad. If for any reason you'd like to remove your question, please press star followed by 2. Again, to ask a question, press star 1. As a reminder, if you're using a speakerphone, please remember to pick up your handset before asking your question. Our first question comes from John Heinbockel with Guggenheim Partners. Please go ahead, John.
Hey, Carl, I wanted to start with when you look at the sort of the gross and net digital sub change, right? So digital subs, continue to drop off a little bit. So I assume the bulk of that is people dropping out, right? You continue to add new subscribers. I'm curious, right? So if you're down a couple of 100,000, are you adding 3, 4, 500,000 and then seeing more than that drop off? And then as part of that, right? I know you're not getting much pushback on price. Do you think at least in the short run, because of the pricing actions you're taking, maybe the subs drop off a little bit more, right? Between now and year end.
Thanks, John. You're right. The lapping the sort of the swell of the pandemic is creating these optics. And likewise, as we discussed in the opening remarks, we're seeing just an uncertainty in demand in the fitness space, and particularly the in-home fitness space. That's why it's so important that our cost structure be variable as we manage our way through uncertain demand patterns. But you're right. The cadence of launches that we scheduled for 2022 are tip of the spear for bringing in new subscribers. We're very pleased with the fact that the price increase has not had an impact on conversion. And I would say that in general, I think it's going to be steady as she goes. I don't expect to see any, I can't expect or forecast any dramatic difference in our subscriber acquisition, except we'll continue to pursue it in a way that is profitable. And that's what's a little bit different than the back half of last year, where we were spending into growth. And since the first quarter, we've stopped reaching with increased cost of acquisition, and instead are now back to our free cash flow model, which has really served the company so well for 2 decades. Does that make sense?
I paused it because if you don't understand the coaching situation, it's hard to grasp that if you're plugged into a team and you're told we're going to the top and you're just going to have to recruit and we're going to stack into you. So this little bit of a cost increase on this online situation, just what's it called? Just tough it out, because you're going to get more recruits. You're going to be able to like start making those big bucks in Beachbody.
Well,
So
do they care really about recruits? They're talking about
subscribers.
subscriptions, and that's not
Yes.
recruits, is it?
Yes, it is, because it's not technically defined that way here. But when we see we're in these Zoom calls, when we see these coaches go live, when they're talking about actually finding customers, they talk about finding customers in the beginning of their calls. And then the 90% of the rest of the call is talking about recruiting. And if you're a coach, you're still counted as a subscriber. If you're a customer, you're still counted as a subscriber. So Carl, if you don't understand the aspect of it being plugged into a team and your leader telling you the price increase is not that big of a deal, it's not a good like.
So what is going up? Is the cost of their programs, is that going up?
Yes.
Or is the subscription cost to be a Beachbody coach, quote unquote, going up?
No, the subscription for the actual like online
classes. Yeah.
Classes. Yeah. That's going up. Yeah. That went up like 20, I think the 20 something percent or 15. It went up by a little bit of a chunk.
Okay.
And it was already kind of expensive. So, yeah. Play.
Yeah. And maybe as a follow-up to that, right, in trying to figure out the floor, right, on membership and revenue, right, so digital subs, I guess they were, 1.9 million, 1Q20, right? So are you comfortable that we will not go back to the 2019 levels, right? There's some permanent customer acquisition here. And I guess, now we are tracking below 19 revenue, but that's largely on the nutrition side. And I guess that's fine. But, digital revenue would similarly not likely go back all the way to 19. How do you think about the floor here on subs and digital revenue?
Yeah, I think I think you've got that right, particularly because we've added the BOD Interactive subscription to the portfolio, which is frankly the bright spot in terms of what we're seeing in terms of engagement and retention. So with the addition of that live interactive layer, I do expect to see continued growth in that one area. Now, I don't want to send a signal that I can identify the floor, but I believe that like I said, I think we're in a very stable place based on our recruiting metrics within our coach network and frankly, the very strong performance of our direct marketing activities, which in many cases have outperformed our expectations. So, I think.
Hey, DC.
Yeah.
When they talk about their direct marketing, are they talking about their coaches or are they talking about something else?
That's what they're talking about. Their coaches. So they use different terms interchangeably, but they're talking about, they bring up their coaches a lot for the stance they're about to make that they're not going to share coaching numbers with the investors.
Okay.
You know what I mean? That just, it's I don't know. It just feels weird to me. So let me give you some more info, XCAL. Mm-hmm. There are some huge leaders, huge team coach leaders who haven't worked their business for years, 2 to 3 years, because their downlines were so massive. They didn't have to do any training calls. They didn't have to do any recruiting. It was kind of like a well-oiled machine. Mm-hmm. However, some of them was like a 15-star diamond dropped to a 1-star diamond within 6 months, which is a huge. So they went down 14 levels, which that's a huge drop for a short period of time when they before have been able to sustain this large downline. So when you see things like that across the board, you see all these big leaders all of a sudden hosting recruiting calls and Facebook groups and all this other stuff because people are dropping off, because people are not going with Beachbody anymore. And so you have to understand the coaching side to understand like the impact that the coaches have on some of these numbers that Beachbody is throwing up here.
Okay.
So
State of things is a fairly reliable place to be. Obviously, my goal and my job is to grow it from here, and I think we've got some good levers to work with there. And I do think that the business is stabilized, is the way I would characterize it. And like you said, go ahead, John.
No, go ahead.
All right. Well, what I would say, like you said, the difference in revenue coming from the nutritional files is, obviously something that we needed to address. In 2019, we had a simpler offer structure, which we were, sort of following the trends in the digital domain, where you give people more choice for customization. But what we found
I think Carl thinks stabilized means something that the rest of us define as something else, kind of like pledged and donated. Some people use those synonymously. So how many coaches has Cheryl? She's at, Success Club 80 something, 86, 88, Success Club 88. She's ranking up there.
The fitness and meal planning and supplement category is people actually are looking for a little bit more prescriptive approach, and variety perhaps is the enemy of decisions. So we are simplifying that. As we've also taken friction out of the funnel, we're also taking some choice and making a very specific recommendation. This is part of what we learned in the first half of the year with the successful launch of 4-week gut protocol. And it's very specific nutritional recommendations. We're repeating that in the second half of the year, and we believe that will have a favorable effect on regrowing the nutritional files as we make it more clear what our recommendations are to the subscriber.
Here's the problem that I see within Beachbody. There's a lot of people that have left Beachbody with eating disorders. So they were talking about the gut protocol earlier on. It was one of the programs that had come out earlier this year. And the person who made that program, where you put food in little tiny containers, is not a nutritionist. She's not a registered dietitian. She's just a former dancer, which is, I don't have anything against dancers, but she has a participatory athletic background, and she doesn't have a science food-based background. And they doubled down on her recommendations for this program, and it was a flop. People had questions, and she has all of these Instagram lives where she's raging at people for not reading their PDF files she gave them correctly. And it's like, if people have questions, it sure is the wrong way marketing wise to yell at them and call them stupid on an Instagram live. And it's like, maybe we look in the mirror and say, did we miss something with our PDF? But anyway, so it's been a whole thing. So when they're saying we're going to really dial in on prescribing people and giving people the strong recommendations for shakes and supplements and eating a specific amount, it's like, that's a bold move to make when you're not a nutritionist or you're not a dietitian. How can a coach?
We're not really even a nutritional company per se,
right?
I mean, they're basically, their goal is selling subscriptions to videos, to exercise videos.
Right. Yep. And so it just feels like a dangerous position to be in, because taking uninformed nutrition advice that basically is saying, hey, you need to sell this much of these shakes and supplements and etc. a month that don't have anything to do with the physical activities. It seems dangerous to give those into the hands of the people who need to make money from them. Because I don't know. It just, I don't really know what I was trying to say, but it's
like building a house without a good foundation on it. I mean, if you don't, first of all, if you don't have your team educated in those processes, then the likelihood of poor or incorrect or invalid information getting out there is high.
Yeah. Yep. It's very high. And it already happens.
Melissa, technically, you can actually mold drywall into a caricature of Captain America. So, I think you're being unfair with your comments.
Oh, geez.
Hey, just one last quick one, and then I'll yield. And I asked you this last time, right? Any
I asked you this last time, right? It's
thoughts on how you can de-risk connected fitness more, right? In terms of, and I know you outsource a lot of that, but in terms of getting the inventory and some of the capital off the balance sheet and the P&L, is there a way to do that, or it just isn't?
Well, it's the sort of the storm has passed us. We've got the inventory, and we're actually in a very good position because we're not in a position to have to support factories and purchase more inventory. We've got the inventory. The customers are retaining very well and are having a great experience. What we've done, John, is pivot the business model. And what we're doing with the inventory that we have is focusing on creating great content and selling that inventory into the millions of subscribers who are already enjoying this content. So that's our focus, because obviously we don't have to chase a cost of acquisition like we do out in the open market if we're trying to start a subscription with a bike. That's when we get into the price pressure problem. But the inventory sits there, and as you said, every time we sell a bike, that benefits the balance sheet. We don't have to go into our pockets to bring more inventory over. So the connected fitness business is sort of steady as she goes. It's our job to make great content and make a good business out of it and satisfy the super consumers who we already have in the database.
okay, XCAL. I'm going to paint you a picture, and this really happened.
Okay.
Let's say you have a lot of bikes in your warehouse and you're trying to move more of them.
Mm-hmm.
And you come up with the idea and you say, we're going to make a competition. That sounds like a great idea.
Yep.
And we're going to give out a prize.
I want.
Yeah. We're going to give a prize out for each person who sells a bike to a customer.
Mm-hmm.
What do you think the prize is that Carl offered his coaches when they sell a bike? Just take a guess of what you would want to receive.
Money.
From the. Oh, that's a great thing.
I want to receive money. I'm doing this thing for money.
So you're saying you wouldn't get excited about a custom Beachbody bike jersey?
A custom Beachbody bike jersey, huh?
Yeah.
Probably not. So the bike sells for probably what, $1,000?
Yeah, $1,300.
$1,300. They're going to give me a T-shirt. Is that what you're saying?
Yeah. Doesn't that sound like a great prize? Doesn't that motivate you to want to sell so many bikes?
No. No.
XCal's is very telling.
No.
I was like, prices were different when I was a kid. You know what I'm saying? It just kind of feels like prices were actually good when I was a kid. I don't know. You're going to give them, and
it's kind of like you're too young to remember Cracker Jacks.
I remember them.
But when I was growing up, Cracker Jacks had this prize inside, quote unquote. But the prize inside Cracker Jacks was never really a real prize. It was a make-believe prize. It was wrapped up in paper, and it was always like something to find whatever it was, but it always ended up being the letdown. Yeah. A T-shirt for selling a $1,300 bike.
Yeah.
Sorry. Now I'm assuming they also get some commission percentage from that.
I'm sure they do. I'm not sure what it is. I'll have to look it up and find it out. But I'm thinking, like, if you have too many bikes in your warehouse and you're trying to speed up the movement of those bikes, you need to give up some of your financial.
You increase the commission. You increase the percentage that they get. Exactly.
That seems like that would be a great prize. So the first 1,000 people who sell a bike get
that's why you're not running multi-million-dollar companies, DC, because you don't understand anything about business.
Yeah.
T-shirts are way more valuable than cash. Way more valuable than cash.
Oh yeah, and to sell people on the idea that riding bikes is fun, guess what they called their bike, their new bike challenge to lose a bunch of weight in 3 weeks?
No idea. What do they call it?
Tour de Pants. Like Tour de France. But he calls it Tour de Pants.
Oh.
And guess what the logo looks like? I thought it was a joke. It looks like a little piece of clip art with pants on the... It's bad. I don't think they paid a graphic designer to help them out with it. I don't think they have one on staff anymore. I think they cut them so they look better for this quarter 2 earnings call.
There you go.
Jeez.
Tour de Pants. That's so great.
Oh yeah, he pronounces it Tour de Pants. Not Tour de France, Tour de Pants. That's what he pronounces it. That's how he pronounces it.
Oh my god.
Oh, that's so sweet. My stepdad proposed to my mom by putting the ring in a Cracker Jacks box. That's a good prize.
Hey, I'm all in for like a diamond ring in a Cracker Jacks box. That wouldn't stink. But getting like a little plastic rocking horse or whatever, I mean, the prices were pretty low rent. I have to admit.
So are you saying that custom bike jersey is a low rent?
No, that's way below that. It's actually below the Cracker Jack box insert.
At least you still get Cracker Jacks when you get the Cracker Jack box. You know what I'm saying?
It's interesting. I have an example of a CEO right now in a company that I'm aware of who who's sometimes uses fear and intimidation to manage and makes decisions that are somewhat questionable. And I am convinced that there are a lot of employee handbooks right now that don't have a recreational drug use policy. They just don't. It sounds like Beachbody doesn't, and I know a number of other companies that don't.
Yeah.
Yeah, they should bring back that page in their employee manual that says that recreational drugs are not allowed while people are at work.
Yeah.
Because otherwise you get things like a T-shirt for selling a $1,300 bike.
Yeah.
I'm just saying.
Yeah. Hypothetically, Carl, stop taking drugs before you make all of the decisions. Jeez. Okay.
Thank you.
Thank you.
John.
You're welcome.
Thank you for your question. Our next question comes from Linda Bolton.
Ooh,
Weiser
Linda
with
rips
D.A.
him.
Davidson. Please proceed.
Yes, hi. So can you just clarify, Mark, the kind of guidance statement that you're making for 2022 in terms of the improvement that you're expecting to make? It has the definition changed? Because I thought before it was EBITDA minus CapEx minus cash spent on content, and that would improve. Are you changing that definition? It looks like here it says EBITDA minus CapEx, so it looks like it's different. So can you just kind of clarify that guidance statement?
Yeah, absolutely, Linda. The definition remains the same. So EBITDA less CapEx for technology as well as content creation. When we look at what was spent in 2021 versus how much we will spend in 2022, there will be a $110 to $120 million reduction.
Okay, so I think on the last call and in the last press release, you had actually improved the outlook to $120 million improvement. So I guess this is maybe a little bit of a step back. So is that just kind of maybe a little bit of a result of the caution over the macro environment in the second half, or is there some particular element of the cash spend that has changed to make you a little more cautious on that improvement for the year?
It's more the former, Linda. I mean, we've dramatically reduced our cash burn. We're managing our costs really aggressively. But as you can imagine, just being a bit more prudent with the outlook going forward from a revenue standpoint could impact contribution margin. So I think it's just accounting for that.
In other words, their sales stink.
Yeah. Okay. That's good to know. Because it's Carl starts butting in because Mark is
being too specific. And he's being too much of a CFO.
Yeah. Which is like, we're like, this is so refreshing. Mark, like, let Mark talk more. Carl starts butting in. It's I'd say it's funny, but it's exhausting.
Haven't really given a lot of specific numbers, but in general,
we stand Linda big
spent on content creation Has that changed versus last quarter? Is the projection higher or lower than your previous projection?
It's actually coming down slightly. We have a baseline for the.
So she was talking to Mark. Carl answers the question. So it's just like, and again, we see this time and time again from a marketing standpoint, XCAL. When you see so many bad marketing decisions in a row, you know you're dealing with a control freak CEO because they have probably overridden their marketing and their other team.
Yeah, certainly.
Not letting...
You know the CFO isn't pushing that.
Oh yeah.
He's not the one pushing that. That's for sure.
Oh, it's Carl. It's Carl for sure.
Because he knows he'll get a new one ripped on these investor calls, and frankly, his job, his job security is low if he doesn't create the financial structure that can help the company go.
Yeah.
And so, but you have the egomaniac CEO oftentimes that will override those things because they have a vision that frankly they need to push through in spite of what it costs.
Yeah. Yep. You don't even know Carl, and you literally described him perfectly. So,
cadence. This is Carl, by the way.
This is Carl. I interrupted. Okay.
We have a cadence of product launches, which that generally is coming in at slightly below budget, but we are seeing some savings as the live content, Bot Interactive, has matured. So we got it launched. We've seen where there are certain efficiencies that we can pick up, and in the back half of the year, we expect to realize some of the savings from those activities, which are ongoing creation of live content, as we refine that system. So it's getting better as that part of the business, as we start to understand what's important to the subscriber and what's not important.
Carl.
Okay. And then I think on the last call you had talked about there being 7 major launches in 2022 versus many fewer last year. Can you maybe tick off like which ones have occurred so far in the first half, and then how many of those 7 are still remaining to occur in the second half?
Yeah, so we are in the middle of a launch right now. So I will say, so far this year, we've had the Job One launch with Jennifer Jacobs. We did a niche program called To Be Pregnant, which was a nutritional program at the top of the year. Then we went into 4-week gut protocol,
which is a flop.
Was a gut microbiome improvement program with its companion 4 weeks for everybody fitness program, and that performed exceptionally well.
Oh, you give me a break.
Then we had Fire and Flow in the spring, which was the first time that you put an intense program with a anxiety reducing every other day, an anxiety sort of relaxation program. And like I said, we're right in the middle of this Lift More launch. We also had while it doesn't count as one of the content drops, we did move all of the OpenFit content and live rides over into the Beachbody library in July, which was our largest content drop ever. And our subscribers are loving all that additional value that they got with no additional cost, effectively. And then we have our first launch on the Beachbody platform with the most popular trainer from OpenFit. Her name is Andrea Rogers, with a cardio aerobics dance program in October. Then we have the new program called, well, I'm not allowed to say actually what that is, but we have another program coming in December, which we already announced it. It's called Sure Thing. We announced it in July. Now, within that, we also have
you cannot say a program is reducing something that's listed as like anxiety. You're not allowed to say that. You get in trouble saying that. Anyways, Carl doesn't care.
Yeah, he's a marketing guy.
Yeah.
Offerings. And like I said, we are focusing the first transaction with the customer into the primary nutritionals that got people results with that program. So for instance, on the Lift More, which is the lifting program, we're recommending what is called the performance stack, which includes a pre-workout and a post-workout. So we're very prescriptive about what's right for that. With the program called XB Sweat and Sculpt from Andrea Rogers this October, we'll be prescriptive about a combination of Shakeology and pre-workout. And then we also have 2 seasonal Shakeology flavors coming in the second half of the year.
XCAL, how much do you pay for your protein shake? How much do you normally would you expect to pay for a big tub of protein?
Usually they're in the the $50 to $75 range.
Okay.
For
Shakeology.
the real big ones.
Yeah, Shakeology is over $100.
Yeah.
So
well, they got to pay off everybody, so that's why.
Yeah, they have to pay down. Yeah, but so they're telling him you need to take Shakeology every day. You need to take all these supplements. So your cost is $500-600 a month.
Now,
if you're doing everything.
Here's the thing: didn't you say that Shakeology was supposed to be the one size fits all? You don't need anything else other than Shakeology to deal with any of your vitamin, mineral, supplements, etc.
Yep. Beachology. Beachbody forgot that they said that. You know what I'm saying? Because they're like, oh, look at all these new. Everyone needs this, and it's like,
oh, sure.
You realize how expensive this is.
Pre-workout, post-workout. You know.
Yep.
You know, you have meal replacements and blah 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 blah. It makes you want to throw up.
Yep.
One is chocolate caramel brownie, and then we have a beach bar, which is a chocolate mint beach bar, and the other Shakeology flavor is vanilla chai. So a lot of stuff coming in the back half of the year. It's definitely more launches than we normally do in one year, and that gives our coaches a lot of things to stay active about on their social media channels.
See, he brought up coaches again. They've talked about coaches throughout the entire call.
They've made a bunch of positive comments about coaches.
Yep.
A bunch of, and the coaches are obviously a core part of their marketing program.
Yep. I would say it is the largest chunk of their marketing program.
Mm-hmm.
The reason people know about Beachbody is through their coaches at this point.
Yep.
Okay. And then can you just say, I think my understanding was that seasonally third quarter revenue for the whole company is usually higher than fourth quarter. So is it fair to say that if you're projecting 150 to 160 million in third quarter, that fourth quarter will be lower than that?
You know, Linda, we're not
are good at math.
We love Linda so much. When we watched it the first time, we're like, Linda, you're the best. And there was like all this stuff, and there's some more. Like, we love Linda so much.
Not giving guidance on the fourth quarter yet, just given the demand environment. But what I would say is,
she asked that question based on what they've already told her in the past. You know what I'm saying? Like, she said, so you're projecting this, and normally you're lower. So are you saying that your fourth quarter is going to be lower? Oh, well, okay. You said that. Probably.
Generally speaking, yes, it is usually a strong quarter.
Hey, Dave.
This whole post-pandemic situation, people wanting to be outside. We're being very diligent also in our marketing spend so that we get immediate paybacks. So that's why we're guiding this way. I don't think Q4 will be materially different than Q3 at this stage. But
one of the reasons,
Carl
one
interrupts.
of the reasons for that is traditionally one of the biggest launches for us of the year.
He said, one of the reasons, sorry, Mark, and continues to talk. Your CFO is answering money questions and you can't let him, so you interrupt him. It's like, I think they have a workout program called something Control Freak. I don't remember what it's called, but there's like a Control Freak one. Like Carl must have made that program.
Happens in December as we go into the new year. So we get the benefit of what we call our leadership event, which is a big event for our coaches that happens in October. Then there's a couple of new nutritional launches that happen in the fourth quarter and this big launch. So I will say that the two generally seem to be shaped the same way. That's been our sort of experience because of the strength of the back half of the fourth quarter.
Okay, and then finally, so is my understanding in terms of this new debt financing that you will actually put that debt on the balance sheet? Is that correct? And if so, at what interest rate is that?
Yeah, Linda, so there's two components. There's the $50 million. We'll put that debt on the balance sheet. And then the access to the additional facility is subject to additional terms and will not be put immediately on the balance sheet. On the first $50 million, the interest rate is SOFR plus a component of cash and PIK. The cash is 7.15% and the PIK is 3%. And what I would say is this is all about creating liquidity on our balance sheet. This is we remain confident
because they're spending too much money. That's why they need to create liquidity, because they're spending too much money.
Yep. XCAL with the truth. So I have a question. So they're saying the cash is 7.15% and the PIK is 3%. What does cash and PIK mean?
I don't know what PIK is.
I don't either. I'm just like, I guess it's some kind of interest rate relating
Cash is
to
cash.
okay, because they're saying like the interest rate plus I don't even know. It's again, the important part is XCAL said it. They're spending too much cash. So
We could fund our operations through existing cash flows. This is all about just precaution and liquidity management.
could save money and fire Mark so Carl
So
can do
you're saying the
everything.
interest rate is essentially SOFR plus 8%-ish?
SOFR plus 10.15 if you add the cash component and the PIK.
Oh yeah, sorry. Okay, okay, gotcha. Okay.
Okay, so PIK is payment in kind. So it's when you're paying something with something that you have, a service or a good, as opposed to cash.
Okay.
It's PIK.
Okay.
Sorry about that.
No, you're good. Thanks.
You know, the other weight loss companies, Weight Watchers and MetaFast, they haven't been doing so well either, and they have different problems. I mean, Weight Watchers has membership, they're not gaining any membership, whereas retention has been good. In MetaFast, they're finding retention has fallen off because people don't want to order the second month of food. So if you had to characterize maybe your business in terms of the consumer and how they're behaving, like maybe you could give us a little color. Is it more new membership growth, or is it more the retention that's suffering? Like, what? Give us a little bit more color on kind of
Retention
what you're
is suffering.
Yeah, I would say that it's really it's a really good question.
I'm trying, Your Honor. I'm trying.
I'm not going to answer your question, no matter what you say.
Yeah, I would say that it's really it's a really good question.
Oh, she almost got me with that one. Let me dodge that. Oh, crap.
Linda's just going pew, 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 like just getting
Carl, have you stopped beating your wife yet?
Oh my god.
No, that's a great question.
That's a great question, and there's a lot of context for this answer, and I'm about to tell you what I'm going to say in the future.
I'm about to tell you nothing and surrounded with a whole bunch of words that mean nothing.
Yeah. God dang.
I think that primarily
we don't need to listen to that one because we know he's not going to answer anything.
Take a knee.
Take a knee. That's exactly right. Take a knee.
Our network has
XCAL brought the spice tonight. Yep.
From this current environment, as any direct-to-consumer company would have, exacerbated by the complexity of the nutritional offerings that we made, which that is what we're improving. Okay, because we gave so much. This is just a real consumer-facing merchandising issue that, you know, you've got to.
I'm sorry, I can't hear what he's saying because my BS meter's going off.
Yeah, and again, the problem is like my BS meter was going off, and I'm like, I know something is wrong. I'm not really good with all the like the number stuff, but like XCAL is definitely spicy on that one. Yep.
Volunteer sales force, effectively. They're not employees. They're just trying to do their workouts and inspire people on social media. And what then those people who are like, hey, I'd like to do what you're doing, they come in, they got a more complex offering as we've gotten more diverse with our product offering. And that's what we feel like what we saw from the 4-week gut protocol program is we were so prescriptive and so specific about what to get that program really hit its strides. And the other ones where we're sort of offering a broader suite that, again, this isn't a sophisticated sales force. These are.
You hear what he just said? This isn't a sophisticated sales force.
People, just regular people like me, just trying to get their workout on and put a little group together. And then when it comes down to, well, which supplement should I use? They're really relying on the company to be prescriptive. And that's what we're fixing in the back half of the year and into 2023. So I would say it's this relationship of a bit of the environment that we're in. As Mark said, people are traveling. Now's not necessarily the time to be pursuing body transformation because you don't know how long you're going to be able to be out and about. And on the other hand, some of the weakness or friction in the merchandising that we're cleaning up.
You know, if your parent asked you a question and you gave him this answer, they'd be like, straight to your room. You're grounded for 3 weeks. You know what I mean? Like, you did it. You're guilty. Oh, Carl. Okay, thanks. You're in trouble, buddy. Hold on. Let me find the part that I wanted you to. Okay, volunteer.
And before we go on, I mean, that Linda knows that her question wasn't answered.
Oh yeah, she's about to take it.
But the call only has so much time.
Yeah.
And she also knows if she asks Carl another question, she's going to have to hear more of the same thing, and she's done.
Yeah. So he blasted his coaches in both paragraphs of this. So he said, you've got this volunteer sales force effectively. They're not employees. They're just trying to do their workouts and inspire people on social media. And then those people who are like, hey, I'd like to do what you're doing. So he called them volunteer sales force. They're just volunteers. So he benefits because he doesn't have to pay them right off the top. He gets paid initially, and then he only gets to pay them when they make sales. And then he said, this isn't a sophisticated sales force. You know, if you were wondering what Carl Daikeler thinks of you, he thinks this of you, especially when he's in front of his investors, because he talks about them way differently on his social media, Dad.
Oh,
you know what I mean? Yeah. He talks about how incredible they are, that they're the ones making all the headway for Beachbody, that they are showing up and doing incredible things, and their before and afters are amazing. And it's just this one picture. And then you hear how he describes them on this call, and it's like, I would be turned off. I'm turned off for the coaches, and I don't even really love multi-level marketing. So in your experience, when you have a CEO or someone that plays both sides, what's your impression?
Here's my fairness perspective coming through. Okay, I just want you to know.
Okay.
Beachbody, I mean, most multi-level marketing companies don't have a very sophisticated sales force. They just don't.
Okay.
I mean, the sales team they have are enthusiastic, young. I say young, well, young or old, whatever they are, people who are hopefully excited about the product that they have and the opportunity that they have. But from a sophisticated perspective, they typically aren't. The average person in that sales force isn't necessarily a very sophisticated salesperson.
Okay.
That doesn't necessarily mean a bad thing. And it's easy to take some of those things out of context and say, "Oh, well, he's dissing the sales force." I will say this. He needs to talk about, he's the CEO of a multi-million-dollar company talking to his Wall Street investors. And he needs to talk about his sales force in a different way than he does on social media when he's talking to them. And so he's walking a fine line between, but the reality is that they're the foundation of the company to a large extent. And if they're not succeeding, it's because Beachbody isn't providing them the tools to be able to help them succeed. That's on them. And I believe, I don't know this for a fact, I believe that he understands that. It's just that, it's easy to point fingers at somebody else than it is to take accountability yourself for things. And we see that everywhere in business, not just multiple marketing companies.
Yeah, I just didn't see that with you growing up. Like, I saw you behaving in a different way than Carl and other CEOs that I've been around. And sure, is it somewhat of a different scale? Yeah, I get that. But there's a certain, I feel like you're the type of person that's going to be clear. And also that if people were like, if we were a fly on the wall listening to you talk to your investors or talk to other people about your sales force, it wouldn't be where you would be completely surprised about what was being said about you when you weren't in the room.
Yeah, and that is critically important. You people need to be hearing the things that they expect, whether it be in a review, on an investor call with people from Wall Street, because ultimately, the bottom line is that are the words coming out of your mouth integrity based or not? I mean, are you telling the truth or not? Are you doing the things that you need to do? And do you change your message based on who you're talking to? Yes, the message may change, but the information should be identical. In other words, if I think my salespeople are doing a great job and they're the foundation of my company, that message should be heard everywhere.
Yeah.
And if there's opportunities that they should be working on and that they need to be addressing in their roles as salespeople, then they should be hearing that everywhere as well. But it
Yeah.
doesn't mean they should be beat up with it. It doesn't mean that they should be punished with that. It means that you should be offering it in a constructive and focused way that says, here's a solution. And these people can be successful if they choose to do this.
Yeah, again, it would feel different if Carl across the board, for as long as he's had his multi-level marketing company way of doing business open, of saying, we can help people who have no experience in sales and fitness sell this product to other people because, like you were saying, XCAL, we have the tools to set you up for success.
Exactly.
And so we can take someone who has limited understanding of fitness and limited understanding of nutrition, and it's a plug and play situation. And we've seen success with that. But again, this messaging is so different from what I've watched a lot of Carl Daikeler videos, his promos, his stories. And it comes across as, it feels like he is like leveraging himself into a better position by talking about his sales force in a negative way in front of the investors to take blame away or take himself out of the crosshairs. When I've seen other leaders stand between their team and the crosshairs.
Yep. Which is what you need to do.
Yeah.
You absolutely have to do that as a leader. You've got to.
Yeah. And that's the difference.
The team has to see you as being the guy in front. Absolutely.
Yeah. And I don't see that here. And I think that's what really rubbed me the wrong way about his messaging on that part.
Fair comment.
Thanks, Linda.
Thank you for your question.
It's almost over.
Our next question comes from Kamil Gajrawala with Credit Suisse. Please go ahead.
Hi, guys. Good morning. I guess first a question on liquidity. Is there, with the the increased funding, are you now and with this, I guess, changes in your capex and your cash burn rate, are you now past the point where we're thinking about if there's 6 months of liquidity left or 12 months of liquidity? Do you think this is sufficient, or is there a timeline and perhaps you have to come back to the market at some point in the near future?
Yeah, Kamil. Look, what I would say is we already felt that we didn't need additional cash, to make the changes we're making in the business. So when you look at how we materially reduced our cash burn down to $6 million this past quarter, really the increment going forward is a lot more controlled from our part to make changes to our platform to position it for growth. And so this liquidity we've created with this debt facility is actually not to get out there and spend it and fund our operations. We're funding all that through existing operations, all the changes we're making. So I think honestly it's just a safety net. So we don't foresee going out and needing any more capital.
That sounds different than what they said in the beginning. If they didn't need to go out and get cash, and that they were
no. In fairness, they said now that they've got that cash.
Okay, now that they got it. Okay.
That's what they're saying. Good. Now that they have that,
they're good.
They said they're good, which will create a fairly significant roadblock if they have to go out again.
Yeah. But he said
also they're telling us the truth, and from now on it's going to be all of what they said for the next several quarters.
Yeah.
So we can take their word and go to the bank and buy a bunch of Beachbody stock at $1.35 a share and make a bunch of money because it's on the road up.
Yeah. So I guess I have a question though, because I still don't understand. So Mark said, what I would say is we already felt we didn't need additional cash to make the changes we were making in the business. Yeah. So is he saying that because he got the cash, or?
What he's saying is that the business itself is with the cuts they've made is cash, that they have the cash, but that the additional cash is for the additional upgrades that they are continuing to need to make.
Mm. So this is an interesting point Dave brought up. What do you think about that, XCAL?
No comment. I'm taking a knee. Who was it that recommended taking a knee earlier? I'm taking a knee.
Jessica's hilarious. Yeah. Oh my gosh. That's a
good point, Dave.
Trends you're seeing on customer acquisition and such, particularly you're in the middle of this large launch. What do the costs look like in this environment versus what they might have looked like a year ago? Just giving us kind of a general sense on, is it getting more expensive? Is it getting more efficient? Can you just maybe talk a bit about what you're seeing there?
You mean the cost of acquisition?
Yes, customer acquisition.
Okay.
Sorry.
Yeah, that has remained steady, quite honestly, and it's not the.
So he's saying that customer acquisition has remained steady. I would argue that customer acquisition has gotten higher. The cost of customer acquisition has gotten harder and more expensive, not less expensive. Or
because of the pandemic, or because they're losing so many coaches, or what? Why would you?
No, I think there's a lot of reasons why the cost of, in other words, the cost of customer acquisition, because that's what he asked about the cost of. So it's a coach-related question. How much does it cost to get a new customer and retain that customer? And I would say with the track record they've had over the course of the last few years from the pandemic to now, that to say that it costs the same as it did in the last year or two is disingenuous. I don't buy that. It doesn't pass the smell test.
Okay.
Primary driver.
And frankly, the other problem is that if we keep interrupting, I don't have any more. Alcohol? I don't have anything else to drink.
Dang. Okay, I'll put. Okay.
Yeah. Just kidding, BC. Go ahead.
The flywheel is we create great content. That content is put in the hands of people who love what Beachbody does. They're called our coaches, and they.
He brought up coaches again.
That bring people together to go.
And he brought up coaches in the same context of answering the customer acquisition question. So again, just remember. So it's just interesting to note how many times that Carl and Mark have brought up coaches, and then when their investors ask about it, they're like, "Oh, we don't share that info." So it's just, okay.
Through that program, in this case, Lift More is an 8-week program. The cost of acquisition in the coach network are all direct, meaning we don't experience those costs unless a sale is made. So the only question is,
get data drink.
Is demand sufficient? And we're very pleased with how Lift More is doing here. It's not you wouldn't normally think as the summer as being the peak of fitness and weight loss season. And, the approach that we took with this, because it's a sequel to one of our most popular programs called Lift 4, has really been to lean into this concept of the people who love Lift 4 to follow on with the sequel. Our network of coaches is primarily female, so it's been great to see that this particular program is also appealing to men, and couples are doing it together. So as we, here we are in the first week of August or so, we're actually pleased to see how that program continues to sell. It was launched in the last half of July, and it continues to create demand. But in terms of the cost of acquisition, that is pretty much
got to 100.
Transactional.
Yeah, and Camille, what I'll add to that, if you compare to a year ago, our selling and marketing expense went from 62% of revenue down to 48%. So in that, you have that very variable component that Carl's referring to in the coach network. And then the balance around what we spend in the media space is highly disciplined. Now, we'll evaluate if we've been too aggressive there, because we've been very, very diligent and aggressive payback. And then our third route to market is obviously cross-selling into our own database of 2 million customers. And that I would say honestly, we're refining and improving, because there's room to do a lot better there, and we're working on it right now.
Okay, great. And then, with every company, we're trying to, the street's trying to work out what would be the implications of a recession. You guys have been around for a while. I respect that your business is a little bit different today than it would have been during the last few cycles. But can you maybe just talk about what you've seen in the past when you're in a recessionary environment?
Yeah, well, if there's one thing that I'm after a couple decades in this that I'm proud of about this company, we've been through 3 downturns, and we, first I would say, as any responsible CEO is never going to take for granted how you're going to do, because you don't know what the demand patterns are going to be in any recession, right? But we have been fortunate enough to find great opportunity in those recessions, because you've got, on one hand, people who are perhaps, looking at their monthly spending and going, yeah, do I need this $100 or $200 a month fitness membership?
I feel like Linda will be that one in the Dragon's Den. Nope, I'm out. So that Dragon's Den is the Canadian version of Shark Tank. When you go and pitch before those like business people, Dad, and there's like all the people and they're like, nah, I'm out. You don't know your information well enough. We're not giving you any money. Yes.
membership.
Gotcha.
And as they're moving, as they're perhaps tightening their belts a little bit, that's when they might move over to a more cost-effective in-home digital solution. And we've benefited by that a number of times.
Okay.
Likewise, our coach network actually gets more productive in a recessionary environment for two reasons. One, the household is trying to offset higher prices from
everyone loves you, XCAL. I was so excited when I saw XCAL was joining today. We're going to try to make it a weekly thing.
Inflation, but also contraction in what might have been their primary income has this requirement of motivating them to be a little bit more aggressive about how they might get productivity in helping other people get started with a Beachbody membership. So we sort of get this little bit of a tailwind that happens because of where we sit in the economics of a recession. But like we can look back to 2008, 2009, we actually experienced double-digit growth back then. And I don't see any reason for us not to, if we're smart, to possibly be the benefactors of the economic environment.
How much is your monthly membership to your gym? Don't y'all have a membership or no?
I do. It effectively amounts to about like $25 a month.
So he's saying,
but I'm a senior, and it's paid by my my Medicare.
Okay, well, a Planet Fitness you can do for $20 a month, or if you want to be able to, or $10 a month. But if you want to go to any Planet Fitness in the United States, it's $20 a month.
Yeah.
So Carl is saying people would be in a position in a recession that, do I need this $100 or $200 a month fitness membership? And if they're tightening their belts, Beachbody is an easy yes. But it's like, I don't know really I'm sure there are fitness memberships that are expensive, but
CrossFit's a very expensive membership, for example.
Yeah.
People that go to CrossFit, I mean, they pay $150 to $300 a month.
Okay, that's true. That's a good point. I'm just thinking about the type of people who would say yes to Beachbody are not the CrossFit crowd.
No.
They're the people going to like Planet Fitness or Lifetime Fitness or Gold's Gym, or, they're not, because the CrossFit people like working out in person with their other CrossFit people. They like the camaraderie and like sweating with each other and, like the competitions of like the leaderboards and stuff.
Yep.
And I'm just, I've got questions. I've just got some questions.
Great. Thank you.
Thank you for your question. Our next question comes from John Comp with Baird. Please proceed.
Yeah, hi, thank you. Just one follow-up on the guidance to start, Mark.
Oh, that's a good point. I pay for a personal trainer. That's a good point. Some people, that's a cost that I was thinking about. But again, you have a licensed professional in that situation who specifically
knows what they're talking about.
Yeah. And so they're asking you to pay $140 a month for Shakeology, $15 a month for the being a coach, and then another $40 on top for the bike part, because the bike subscription is not included in the coach subscription. So you're already at like $200, you're already up there, or they're close to $200, and that's not even the other supplements that you're supposed to get. We're almost done. Sorry.
Loss piece and then the cash usage piece, just within the comments that you've given for the guidance.
Yeah, absolutely, John. Look, I'll say I would say most importantly, the cash usage would likely be comparable to the adjusted EBITDA.
Well, I'm glad your husband caught it, or didn't catch it, but caught it before it fell off.
That's number one. Number two, like I stated, we do have a $7 million expense in that Q3 that relates to our coach summit. That's one time. So those are the two things I would say. But cash usage.
Not one time. They have another one in October.
They have another one in October? They have something in October.
It's something they're doing something with their coaches in October too.
Yeah. So I don't know what that cost is going to be.
Yeah. Maybe not $7 million, but
hopefully not $7 million.
And frankly, a lot of this does relate, like I said, to our deliberate and controlled investment in our platform and some of the changes we're making that Carl spoke about as well.
Okay, maybe just one follow-up if I could. It looks like the cash outlay for property and equipment for the year was about $19 million in the first two quarters. Could you maybe further break down what that's attributed to, and then what should the full year number be comparable to that $19 million?
Yeah, look, John, we could dive into more specifics, but what I could tell you is year over year, there's definitely substantial reduction, and because there's a technology component and then there's a programming component. So let's let's set up time where we could run you through the details of the numbers and give you that visibility.
I mean, wouldn't the other investors want to know that number too? Is that a normal thing for him to say, like, let's talk separately about and give you that answer separately?
Whatever this is their show. They get to play.
Okay.
They get to make the rules.
Yeah. To me, it's just like, okay, that feels a little sketch to me that you didn't answer the question, but
there's something going on there.
Yeah.
Okay, sounds good. Maybe one broader question then, just going back to the cash question, but when you have expressed your confidence in sort of the current trajectory that you wouldn't need cash necessarily, can you just comment on sort of what's supporting your confidence? And if you look at the business as you see it today, like how many quarters out are you until you would expect positive, cash generation for the business?
Yeah, so John, looking at how we just reduced the cash burn from 44 to $6 million in one quarter, it just demonstrates that we have the ability to control our cost structure, right? And as Carl said earlier, and I said in my comments, 75% of our cost structure has been variabilized. So with that in mind, the deliberate investments we're making, if we could slow them down when we want, right? So that would give us additional flexibility if we need. And then all the initiatives I spoke about around nutrition, pricing, SKU rationalization, looking at a distribution network, moving processes to the cloud, all these things I spoke about, the benefits of all those kick in 23. So that's why I said we feel pretty comfortable that we could fund the business through existing cash flows, not through the borrowed money, if that makes sense.
And just for the revenue piece of that comment, if your business trended closer to 700 million from a run rate, top line revenue perspective, would that be enough where you could adjust the cost basis to be profitable? Or I'm just trying to get a sense of how much flexibility is that you're applying.
Yeah, I would tell you, John, we're obviously still, this is a healthy growing market, right? There's some short-term headwinds coming out of the pandemic and let's say the upcoming recession, but long-term, we're still believers in the long-term growth of this market. So we're still investing to position the company for growth. But if that doesn't come through, yes, we could definitely control our cost structure to deliver profitability at that level.
Okay, appreciate all the comments. Just maybe last one, Carl or Mark, I'm just curious, what have you seen in the coaching network? I don't know if you can share kind of numbers of coaches and how that's changed. And some of the changes within the network over the past few quarters, is there sort of a natural headwind to growing the business until you anniversary some of the changes? Any color there would be helpful. Thank you.
Yeah, I don't know that we published the coach number, but I will say a couple of things have happened which were very healthy for the business. In fact, by splitting out the coaches, the definition of a coach, a person with intent to monetize their health and fitness, versus a preferred customer who's really buying into the concept of a discount on the product. So we split that up so that we didn't have people in the coach network who didn't have any intention to be a coach. That has actually accelerated by having that designation, we've accelerated the number of preferred customers that came on. Likewise, the people who actually intend to be coaches, we can isolate them, train them appropriately, and listen to them for what they're looking for.
What training are you getting as a coach? You're not. You're going on a Zoom training from someone else who's higher up than you, so it's diluted. It's hit or miss whether someone is able to actually train you to be able to be good at sales. There's some tippity top of the very top of Beachbody, and they've gotten to the top because they're popular, that people want to be around them. It's not that they're good trainers. So when they're saying, what targeted specific training are they getting? They're getting plugged into a Facebook group. They're getting plugged into a Zoom group based off of their own little recruiting situation. It's not, they're painting a picture like they're giving some incredible training, and that's not what I've seen.
I heard something different from that. I heard that they were separating out the ones that were coaches from the ones that were preferred customers.
Yeah,
and so from a metric perspective, and then when they're looking at the growth of the different categories, instead of lumping them all into one category, they're actually separating them out into a couple of different categories, and that's giving them a different metric in terms of where they're going with that group.
Okay, that's fair. I'll keep listening. I still am feeling like Again, just because from what I know from Beachbody, like you sign up, preferred customer and coach just it means like you could make commission or you could not. So like
Right.
if you sign people up, if as a preferred customer, you're not going to get commission. If you sign people up as a coach, you're going to get commission. So it's about payout. So I mean, it sounds better for Beachbody with a preferred customer for them to have more of it because they wouldn't have to pay out. But again, if you're slowing down momentum of actually signing people up, you'd want to have more coaches, but they don't have to pay.
I think what it bought, and that may very well be the case. I think they're trying to look at the difference between their coach group and their preferred customer group, because then it does. And Dave made a great comment about the fact that it makes their income disclosure look different. That's true. If I've got 500 people that are supposed to be making money, as opposed to 100 people that are supposed to be making money, then that's a very different. The dividend, the divisor of that equation, is different.
Yeah. Yep. That's true. Good point. Good point, Dave.
And that's the other dynamic. And I don't want to get ahead of myself in terms of what we're working on and excited about for 2023. But now we've got this clear view of what the coaches need and what they're looking for to maximize this opportunity for them. I believe we're going to simplify the business in a way that will help us achieve our mission of helping more people get involved with this community of health and fitness and taking better care of yourself. So stronger signal from the coaches, but at the same time, like I said at the beginning, they're operating in the same consumer environment as all of us. And it's not a time that we can take for granted how easy it can be to generate a sale. So that's why we're taking the view that we are.
Okay, got it. Now, best of luck.
Thank you, John.
Thank you for your question. Our next question comes from Joanna Zhao with Bank of America. Please go ahead.
This is the last question.
Hello, thank you for taking my question.
Questions.
My first one is really trying to understand the Q3 guidance of the 150 to 160 million on the revenue side. I think the midpoint implies a 25% down year-over-year growth. Just trying to really understand what component of that is driven by the macro headwind and what component of that is driven by the reduction on the sales and marketing spend. So I've seen that your sales and marketing spend for Q2 is down quite a bit, as you mentioned, quarter over quarter to 87 million. How much of that is the network payout, to your coach network? And what is your kind of plan for the sales and marketing spend for the second half of this year? And any thoughts on like balancing growth versus profitability? Thank you.
So, Joanna, I'm going to try to cover all this. There's a lot of questions, right? On the first one, look, Q2 over Q2 reduction was around 20%. So
I think his
taking
computer
a more
died.
prudent view on Q3, given the macro condition, is why we set that guidance that way. And on the sales and marketing front,
They could do like prove it and make it so you can only be a distributor if you have recruits. Otherwise, you're just a customer. Yep. I think that Mark was actually writing down some questions and trying to make sure that he's going to answer her questions. So I'm going to give him the benefit of the doubt since he's actually been using some numbers for his answers. But yes, very long pause.
We're going to continue to be diligent.
Don't answer
so that we get
That's okay. You fell off the table again? Like last time?
a quick ROI on those customer.
Get the old drunk off the screen.
Oh my gosh. So Mark was like, wow, that's a lot of questions. You got a lot of questions there.
I would say the percentage of revenue that you saw in this last quarter is consistent with what you'll see going forward. And then in terms of profitability versus revenue, what I would say the investments we're doing are really more around things we feel our platform needs and our offering needs.
Everyone's excited you're back.
The company to get back into growth next year. So it's and that's controlled investment is what I'll finish by saying. Meaning, if ever we see like we need to slow it down, we could slow it down.
I think one of the dynamics that you're seeing here year over year is the third quarter of 2021, we were aggressively selling bikes, and we were also investing in a significant media push, brand strategy, and acquisition. And that's when sort of the reality of the environment was really becoming clear. So what you're seeing now is a much more prudent approach and a reduction in chasing revenue rather than buying revenue. Now we're really staying true to what built this company over the course of 2 decades, and that is investing in media and acquisition that we know is going to generate free cash flow. And that's been the fundamental of the business since we started it. And that's why we're taking this view of, if we're going to sell bikes, we're going to sell it into the database. We're very good at generating digital subscribers in a way that is at a good relationship of CAC to LTV, and we take advantage of the positive relationship we create with those subscribers and sell them a bike, and we don't have the same cost of acquisition. So while that'll be a slower rate of bike sales this third quarter as compared to last third quarter, the economics of those sales will be much more favorable. Does that help answer your question?
Yeah, yes, thank you. That's helpful. And then you did mention for Q1, your sales marketing out of the $106 million, that was $70 million was related to the sales commissions to the coach network. How much of that is attributable to the $87 million for this quarter?
Joanna, we could dive deeper into that. Generally, we don't. What I would tell you is, as a percentage of revenue, we've taken it from 62% to 48%, selling and marketing together. And then sequentially, from Q1, you did see a pretty nice reduction in overall spend by 19%. We don't usually disclose how much of it is coach compensation versus media acquisition.
Wouldn't that be important to know for the investors, though? Like, just in general, if
only because they're not making money. If they were making money, it wouldn't matter.
Got it. I forgot that part. I just keep forgetting the part where they're not making money. You know, like that just slips my mind whenever I'm asking. Like, this doesn't make sense.
Now they're worried about things like, how many pens did you have on your desk, and why did you buy that toilet paper, and
yeah, why do we have so much paper? Why isn't everything in the cloud?
Yeah.
Oops. Almost ended.
Okay, that's fine.
There's 3 minutes left on the call.
That's fine. My next question is on the mixed bike segment of the business. You mentioned in the last quarter earnings call that your focus is to increase the margin closer to the break even for the rest of the year. Do you feel that your plan is still on track to meeting the break even target by the year end, or has that been pushed out? And what are your plans with the mixed bike business if the margin doesn't really or cannot get to close to break even? Have you thought about potentially divesting that bike business?
Yeah, Joanna, what I would say is, first of all, in the gross margin, a substantial portion of the negative gross margin was related to non-cash reserves, 15 out of the 20 million. So one, it makes it look a lot more negative than what it is. Number two, when we look at the holistic view of a bike customer, we don't look at it just as the upfront bike sale. We look at it more as the bike sale plus the monthly subscription, and the retention and engagement tends to be higher, which is a positive in that LTV formula.
That's
and
fair.
then, I think in terms of trying to make sure we're not participating in price wars to create more negative margin on that front, given the market situation, this is where, the good thing about us is we could sell it to our existing customers, right? So I think trying to push that way reduces the customer acquisition cost, which has a positive impact on the gross margin.
Thank you for your question. There are no questions waiting at this time, so I'll pass the conference back over to Carl Daikeler for closing remarks.
Okay, well, I appreciate everybody. We ran a little bit over.
But thanks everybody for joining us today, and thanks for your interest in the Beachbody Company. And we look forward to talking to you again next quarter. Thanks everybody.
Well, here's what's your overall take on that, XCAL, for like a spark notes of XCAL for earnings call for quarter two?
They're in trouble. They are working hard to get back to profitability, and they're not there yet. And they're scrambling to figure out, how they're going to get there.
Okay.
The good news is that their CFO sounds like a sharp guy.
Mm.
He sounds like he has his stuff together.
Yeah.
I will say that the bottom line in a sales related company like this is sales.
Okay.
And if you don't sell, you don't eat. And they are still far away from being profitable. So
Yeah.
they've got their work cut out for them, I think, in the next really 4 to 6 quarters, not just the next 2 quarters.
Mm. Would you say that Carl is, just from hearing the short amount of information that you've heard from Carl, what if you were a type of person to make assumptions, would you say that what's your perspective of Carl?
He's a salesman. He's a salesman, and that's what he does. And he's selling. Everything he says was about selling.
Yeah. Okay.
He's a salesperson, and I think that he's got, hopefully he's surrounded by good people that he listens to. Because, like anything else, salespeople can have a tendency to sell themselves on what they think is the right thing.
Yeah.
And hopefully he's got lots of good people around him that are giving him good feedback and direction to be able to help him move in the right direction. We'll see.
Yeah, I hope that he does. It comes across that maybe the people around him, he's not taking the advice that would really propel Beachbody back to a stronger position.
Yeah.
That I don't
They're
know.
in a tough market, and they've got they've got a big challenge in the fact that their sales team isn't really an educated sales team in terms of they don't have certifications, they don't have the knowledge, the technical knowledge to be able to advise their clients, and they've and so they would be well better served to promote their add-ons and their supplemental products and things of that nature as what they are, as opposed to try to be experts in them, because frankly they're not experts, and I think they come across less effectively when they try to do that.
So Elizabeth asked, do you think that they can come back from this? It just isn't looking good. What's your
That's a great question, Elizabeth. I don't have a crystal ball, obviously. I do think that the digital market in general is a very powerful market. Just look at Twitch and YouTube and all the things. Streaming applications are absolutely taking over the internet. And I think if it's almost like they want to build their own digital channel, which may in fact become the direction that they go in, which would be obviously away from their multi-level marketing coaches. But the bottom line is that they've got to become digitally competent and very much figure out that digital piece. I think that creating a streaming service for them would be a critical part of whatever their strategy is. And I think ultimately, they've got to be as good at the digital side as they are at the content side.
Yeah. So Jessica asked, should Beachbody be responsible for training a sophisticated sales force?
I would say that they should be responsible to make sure that the proper training for their people is available. If I stop short of identifying a sophisticated sales force, because frankly, I don't think that it needs to be necessarily super sophisticated, as long as they know where their boundaries are and can do a good job within the context of what they do well. They've got some great content. I've looked at a number of the different Beachbody courses as far as that's concerned. They've got some great content out there. Like you mentioned that they're, maybe a part of their next step is to make their Shakeology stuff taste good. Maybe that would help.
Yeah,
but
could you imagine?
in any event, I almost don't want them to become more expert in all of the technical and certification kind of approaches, because I don't think that's a place to their strength. It plays to their weakness. That would require them to have a bunch of certifications, and frankly, they don't have that. Nor do I think they should have. They should get those. But then the flip side of it is, I think they spend way too much time talking about things that should be left to professionals.
Yeah. Yep. Someone from Norway, one of my friends, Lynn, she sent me something that she made. I don't know if it's the right direction, but it says, you can't talk your way out of problems you behave yourself into. Logic by XCAL. She did the cross stitch, and I just got it in the mail today.
That's awesome.
I'm gonna frame it, and everyone loves your little sayings, and that was a good little.
Yeah.
I hope that boosts your good feeling and that you have.
Well, I love being on here, DC, and I really enjoy interacting with your audience as far as that's concerned, and look forward to coming back next week.
Awesome. Well, everyone, live chat, you've been incredible. Replay crew, leave us a comment. Let us know what you think. And please give XCAL a very warm welcome so he continues to want to come back. So we'll see you next time, and be safe. Please don't join an MLM, or if you do, make sure you go in fully informed. All right. Bye, guys.
Adios.
Oops.